And then the last piece is of my presentation is S Corporation versus Sole Proprietorship and the self-employment tax. So how many people in here are S Corporations? How many people in here are sole proprietors? Everybody is.
I guess I would be.
Okay. So I'm going to draw it on this board just because there's a little more space. So if you can't see, you might want to shift a little bit to that side of the room. I'll walk through a very rough example. I'm going to use round numbers to show you what the impact is if you are a sole proprietor, potentially converting yourself to being an S corporation. So let's say as a sole proprietor, you had a wonderful year and you netted $100,000. Yeah, 6 figures. There are 3 pieces that come out of that. You have federal tax, you have state tax, and you have the self-employment tax. If you're making $100,000, basically regardless of the size of your family, federal tax, you're at about the 22% tax bracket. State tax, I'm just going to round, it's basically 6%. And then the self-employment tax is roughly 15%. You add all those up, that's 43%. And this is where I put this. Because you're giving all those different pieces 43%, which is, and again, I'm not factoring in the QBI right now just because we're just going to ignore that for now. That's 43,000. So you technically only made $57,000 after taxes. So that sounds like what everyone wants to be doing when they make 100 grand is actually only get 57. Okay, so going over to the S corporation, we're going to stay with that same $100,000 income. When you're an S corporation, not only are you the owner of it, you're also an employee. So what we have to do first, we have to pay ourselves a payroll. For S corporations, you have to pay yourself what the IRS determines is a reasonable payroll. There are no instructions on what a reasonable payroll is. They say you have to do it. So I always tell my clients basically 4 things. The least you can pay yourself is minimum wage. So right now, $7.25 an hour, 40 hours a week, all year long, it's about $15,000 to $16,000. That's the least you can pay yourself if you're paying yourself a reasonable payroll. The second is you actually have to be making money. So again, if you're not making any money, a reasonable payroll is $0. So that's the second piece that goes into it. Number 3 is, what would someone in your position be getting paid working for somebody else? So what is that kind of industry standard? If you're a traveling salesman for somebody else, are you making 30,000? Are you making 70,000? And then the 4th factor is reasonable. If you walked up to someone on the street and said, "Hey, me as a business owner, I'm making $100,000. I'm paying myself a salary of X," would they laugh at you, or would they say, "That makes sense"? So again, for this example, we're going to say that you paid yourself 50 grand. So it's right about the median for the country. So again, we'll go with reasonable. Out of that 50 grand, since you are an employee, Social Security and Medicare need to get paid. On 50 grand, it's about $4,000. So 4,000 is going to come out of your 50 grand, and then the company is going to match and put in $4,000. So then down this line, we were at 100. Take off 50 for the payroll, 4,000 for the payroll taxes. Now we're at 46 over here. So with an S corporation, it's a pass-through entity. So the corporation itself doesn't pay income taxes. It goes through to your personal return. So on the 50,000, just like any W-2, we're paying federal and state. On that 46, we're also going to pay federal and state. So that piece is still the same, 28%. So we take off the 4 grand, we're at about 27,000.
Now you take off 4 grand twice.
42,000.
No, because 4 grand comes out of the 50.
But then you have another 4 grand.
That's right here.
40.
This is 46.
Up top.
So 100 minus 4 is 46.
And then you have another 4.
That came out of the 50. So you only paid yourself going home 46, but you still pay taxes on 50. This is box 1 of your W-2 before taxes. So far we've paid $27,000 in income taxes. And then over here, because we're the owner, again, we paid both those halves. So we paid $35,000 in taxes. And we got to actually take home $65,000. We just saved $8,000 by switching from being a sole proprietor to being an S corporation. Just by using the tax law to your advantage, you put $8,000 more in your pocket by filing 4 pieces of paperwork.
I think a lot of people are really afraid to switch over. I mean, I've talked to hundreds of business owners over the years. And the smaller the business, the more afraid they are. and you know, I tell them, I'm like, don't be a business. You know, incorporate. Just like stop the madness. And I think if there was some way to educate these smaller business owners, like what you're doing today, you know, they would benefit from that.
Mm-hmm. So this is my magic number. It's not scientifically proven. It's not anything proven. That's the amount of income when I start suggesting to my clients that they need to at least consider going over to that S corporation.